The practitioner requires the management to provide a written representation that management will fulfill the responsibility, describing the agreeing terms of engagement. Written representation will include management has fulfilled the responsibility for preparing the financial statements in accordance with the applicable financial reporting framework, including whether relevant that fair presentation and presented in the practitioner. Responsible practitioner determine the statement provide some of all the representation required above. The relevant matters covered the other statements need not be included in the written representation. In addition to the written representation required by the SRE, the practitioner may consider it is necessary to request other written representation from the financial statement. It may be necessary in needed. For example, to complete the practitioner evidence that represent respect to certain terms and disclosure reflected in the financial statement, where the practitioner considers such representation to be important, the forming and conclusion of the financial statement on either modification or non-modified basis. Practitioner shall request the management of the written representation that management has disclosed to the practitioner. Identify the entity related parties and all the related parties, relationships and transactions the management is aware. Significant fact related to the fraud or suspected frauds known to the management that may have affected the entity. And known actual possibility of non-compliance with the laws and regulation which affect non-compliance affect the entity's financial statements. All the information relevant to use the going concern assumption financial statement. So all the events occurring subsequent to the date of financial statement for which the applicable financial reporting frames requires adjustment and disclosure have been adjusted and disclosed. So the clear commitment, the contractual obligation and contingency that have affected and may affect the entity's financial statements. Transactions with no consideration are taken by the entities in financial reporting period under consideration. If the management does not provide one or more of the requisite representation, discussing as appropriate, re-evaluate the integrity of the management, evaluate the effect that this may have on the related take an appropriate action, including determination of possible effect on the conclusion of the practitioner report in accordance with the standard of reporting engagement. Statement for withdrawal from the engagement. If withdrawal is possible under the applicable law or regulations appropriate, the practitioner will conclude that there is insufficient. The management doesn't provide the required representation in respect of the responsibility of preparing the financial statement. Evaluate the evidence according from the procedure performed. The practitioner shall evaluate the sufficient appropriate audit evidence has been obtained. To necessary circumstances to be able to form a conclusion on the financial statements. In some circumstances, the designing a preliminary inquiry, an analytical procedure, and a procedure to address the specific circumstances. From the procedure performed is not sufficient and appropriate to be able to form a conclusion of financial statement. Practitioner may extend the necessary where necessary for the practitioner and supplement. The practitioner will not be able to obtain sufficient and proper audit evidence to engagement, determine the effect of the practitioner report or on the practitioner's ability to complete the engagement. For example, the practitioner inquiries subsequent matters. If the practitioner is not able to obtain sufficient and proper audit evidence to form a conclusion, the practitioner shall discuss the management to start specific procedure does not constitute a limitation of scope of review. The practitioner is able to obtain sufficient and proper audit evidence other implication for the review, such as the practitioner consideration of areas or engagement is continuous. Forming a practitioner conclusion and financial statement. Forming a conclusion, the practitioner shall also consider the impact previous year review of the entity's financial statement and financial statement support. The qualitative aspect of the entity's accounting practices, including indicators financial statements are prepared using a fair presentation framework. The practitioner consideration shall also include the overall presentation, structure, and content of the financial statement. And where the financial statement include relevant notes appear to be presented underlying transaction or gives a true and fair view or appropriate to the contents of financial statement or support. The practical conclusion of the financial statements, whether the unmodified or modified financial statement. Unmodified conclusion. Practitioner can express an unmodified conclusion in the practitioner report on the financial statement as a the practitioner attention that causes the practitioner to believe that the financial statements are not prepared or on the material aspect. Unmodified conclusion. The practitioner shall, unless otherwise required by the laws of regulation, use one of the following phases as appropriate. That causes us to believe that the financial statement do not give a true or fair view or do not present a fairly financial statement prepared using fair presentation framework. Based on our review, nothing has come into our attention that causes us to believe that the financial statements are not financial statement prepared using a company center. Modified conclusion. The practitioner shall express a modified conclusion of practitioner obtained that the financial statements are materially misstated. The practitioner is unable to obtain sufficient of proper audit evidence in relation to statements. When a practitioner modifies the conclusion, this is qualified conclusion, adverse conclusion, a disclaimer of conclusion as appropriate for the conclusion paragraph in the practitioner. Under the appropriate heading, an example, basis of qualified conclusion, basis of adverse conclusion, basis of disclaimer conclusion, or as appropriate. Paragraph referred on basis of the conclusion paragraph. The financial statements are materially misstated. If the practitioner qualified conclusion, when the practitioner concludes that the effects of matters given rise to modification of material but not pervasive to the financial statement, modification of both material and pervasive to the financial statement. It will be material mistake. When a practitioner expresses a qualified conclusion of financial statement, shall, unless otherwise required by the law and regulation, use one of the following phases as appropriate, based on our review, except the nothing has come to our attention that causes us to believe that the financial statement do not give a true and fair view, or does not present fairly in the presentation or based on our review, except for the effect of the matter described in the basis of the qualification. Causes us to believe that financial statements are not prepared in all the respecting accordance with the applicable financial reporting framework. For financial reporting using the compliance when the practitioner expresses an adverse conclusion on the financial statement, the practitioner shall, unless based on our review, due to the significance of the matter described on the basis of the adverse conclusion paragraph, in accordance with the applicable reporting financial reporting framework or the financial statement report using a fair presentation framework. Based on conclusion paragraph, the financial statements are not prepared in all material aspects. In accordance with the applicable financial reporting framework or the financial statements are prepared using a statement that gives rise to either qualified conclusion or adverse conclusion. The practitioner shall describe financial effect of the misstatements. A misstatement relating to the specified matter of the financial statement. If the material misstatement relates to a specific amount of financial statement, including quantitative disclosures, unless impractical, disclosures are misstated. If the material misstatement refers to narrative disclosures, describe the nature of omitted information unless prohibited law or regulation. Practitioner include the omitted disclosure by practitioner to do so. Narrative accounting disclosures they are due to give a view of the companies through the eyes of the manager. The narrative representing present management constitutes discretionary. Inability to obtain sufficient appropriate evidence. If a practitioner is unable to form a conclusion of the financial statement, he is unable to obtain sufficient express a qualified conclusion. If the practitioner concludes that the possible effect of the financial statement material but not pervasive. A disclaimer is a conclusion that the practitioner concludes that the possible effect of financial statements quantitative practitioner shall withdraw from the engagement if the following conditions are present. Due to the limitation on the scope of review, the practitioner unable to obtain significant, appropriate, and evident audit evidences to form a conclusion on a financial statement. Undeducted misstatements are material and pervasive. And withdrawal is possible under applicable express and qualified conclusion on the financial statement due to an inability to obtain significant, appropriate audit evidence. Practitioner should unless based on our review, except for the possible effect of the matter, describe the basis of qualifying conclusion. Financial statement do not give true and fairly, or do not present fairly in all material aspects. In accordance with the presentation. Based on our review, except for the possible effect of the matter described in the basis of qualifying that the financial statements are not prepared in all material aspects. In accordance with the applicable financial reporting framework for the financial statement prepared using the financial statement, the practitioner should state the conclusion paragraph standard. Due to significance of the matter, describe the basis of sufficient appropriate evidence, form of a conclusion on the financial statement, and according to the practitioner does not express a conclusion in the financial statement. In the basis of the conclusion para, relation to the either the qualified conclusion due to inability to obtain sufficient appropriate into the reason for the inability to obtain sufficient appropriate audit evidence principle. The practitioner report. The practitioner report of the review a title. We shall clearly indicate that the report is an independent practitioner for review engagement. Addressees as a required with identifies the financial statements as review, including identify the title of the statements, refer to the summary of the significant accounting policies and the explanation information. and state the financial statement has been reviewed. As for the reason, management for the preparation of the financial statement including explanation and management's responsibility. This is an preparations according to the applicable fair presentation. But the internal control as a management determines necessary to ensure that the preparation of financial statements are free from material misstatement. Financial statements are special purpose financial statements. I describe the purpose of these financial statements are prepared and if necessary the intended use and the special purpose of financial statement information. And the management has a choice to the financial statement framework in the preparation of such financial statement. A reference to the explanation of the management responsibility for. Determine the applicable financial reporting framework in acceptable circumstances. I describe the practitioner responsibility of expressing conclusion in the financial statement refer to the standard of reporting engagement while the relevant applicable laws and regulation. Describe the review of financial reporting statements and the limitation and its following statement. Under the standard of relative engagement in the limited assurance engagement. It's a limited assurance engagement. The practitioner performs a procedure and the primary consists of others within the entities as appropriate applicable analytical procedures and evaluate the obtained audit evidences. Perform as a review substantial list and performed in the audit conducted in accordance with the standard of operating. In accordance with the practitioner does not express an audit opinion of financial statements. Conclusions on the financial statement as a whole and appropriate and whether the applicable financial reporting used to prepare a financial statement. In the practitioner paragraph under the appropriate heading that contains a practitioner modified conclusion as appropriate. A paragraph under the appropriate heading that provides a description of the practitioner obligation under the SRE and complete the relevant ethical requirement. Date of the practitioner report. Practitioner shall date the report from no earlier than base of the practitioner conclusion of an statement. All the financial statements will compare as a financial statement under the applicable financial reporting framework, including the earnings authority has asserted that has been responsible for financial statement. Practitioner signation and place of the picture. Emphasis of the matter. Other practitioner may consider it necessary to draw and users' attention to manage and present or disclose the financial statement that the practitioner judgment is that importance that shall include the emphasis of matter paragraph in the practitioner report, provide the practitioner has obtained significant appropriate evidence to conclude that matters not such paragraph shall refer only to the information present or disclosed in the financial statement. The practitioner shall include emphasis practitioner conclusion on a financial statement using the emphasis of matter on applicable appropriate heading. If the practitioner considers necessary that those or present or disclose a valid statement, that is a practice judgment relevant to the user's understanding of the review. Practitioner responsibility of practitioner shall do so in the paragraph in the practitioner report on the heading other matter other appropriate heading. Other reporting responsibility. The financial statement that are addition to the practitioner responsibility and SRE in the report of the financial statement, such a situation where the reporting responsibility paragraph in the practitioner report heading report of other legal regulation. Other is appropriate to the contents of section following section of the documentation. The preparation of the document is the review provides evidence that the reviews are performed according to the relevant or sufficient appropriate records on the basis of the practitioner report. Practitioner document is significant to enable an authorized experienced practitioner has no previous connection with this engagement to understand comply with the standard of reporting engagement and applicable legal requirement conditions. Results obtained from the procedures and practitioner conclude form necessary the engagement practitioner conclude reach thereon and significant professional judgment made in the reaching this conclusion. While documenting its nature, time, and extent of procedure, who performed the work and data the work is being completed. When review the work performed with the purpose of quality control for the engagement and the period of extent of those charged with the governance are relevant to the performance of review of significant matter arising during the engagement, including the nature of those matters. Audit and review. In the case of the course of engagement, practitioner identify the information that is inconsistent with the practitioner finding regarding significant addressed. Audit and review. The audit engagement has many similarities with the review engagement. However, there are certain importance areas discussed performance and its objectives and reporting highlighted. Overview of the distinct area between audit and review. Audit is type of reasonable assurance. Reasonable assurance is given over the lower level of assurance than reasonable assurance is given. It performs elaborate and extensive procedures primarily focus on inquiry and analytical procedures. It draws reasonable conclusion on the basis of sufficient appropriate evidence. It's not assurance opinion, its language assurance opinion is positive. It provides assurance conclusion. The language assurance conclusion is negative. You are conducting a review of financial statement companies gather upon the inquiry with the possible material statement and discuss how you proceed with the SRE. SRE 2410. A review of internal financial reporting financial information performed by the individual auditor of India. When the auditor undertakes an engagement to review the internal financial statement, the audit clients on form and conclusion on the report. Other reports assigned from the independent auditor of the financial statements of the financial statements of the report. What is the internal financial statement? The internal financial statement is internal financial accordance with the applicable financial reporting framework and comprises either incomplete or in accordance in condensed set of financial statements and report that is shorter than related to the financial statements of quarterly other financial statements. Object of the engagement to review the interim financial information in accordance with the engagement to review the internal financial information is enable the auditor to express a conclusion on the basis of the review. Ending is statements are not reported in accordance with the material list. In accordance with the applicable financial reporting framework, auditors may inquire and perform analysis and other risk express an inappropriate conclusion that is interim financial statements materially misstated. The objective of the review of interim financial statements conducted in accordance with the standard of auditing engagement. Review of the interim financial information does not provide a basis of expressing opinion or a material risk in accordance with the applicable financial reporting. The review of the contracts of the audit is free from material mistake. Review is consists making inquiries primarily with the person responsible for financial. The review may bring significant matters affecting the interim financial information to the auditor attended, but it does not provide any other evidence that would require. Agreeing According to the terms of engagement, SRA 2410 applies to the review of internal financial information performed by the client should agree on the terms of engagement. Now, agree terms of engagement so accordingly recorded in the engagement because such communications helps to avoid miscommunication regarding the management responsibility, extent of the auditor's responsibility, and the assurance obtained and the nature and the form of report. Understanding the entities understanding that the entity and its environment, including internal control as it related to the preparation of both annual and interim financial statements, is sufficient. Identify type of potential material statement considered likely to be occurrence. Select the inquiry, select the analytics, select other review procedure that has come through audit attention that cause auditor to believe that the internal financial information is not prepared in all materials in accordance with applicable financial statement or one or more annual reports has obtained an understanding of the entity and income, including the internal control as it related to the preparation of planning the review of internal financial statement. The auditor updates the understanding. The auditor also obtains sufficient understanding of internal from the internal control as it results in annual financial communication. Some of the procedure performed by the auditors to update the consideration the entities includes the following: reading the documentation to its necessary to current year and corresponding to financial priorities. To enable the auditor to identify the matters that may affect the current period interim financial risk of management overrides control that are significant to the audit of the prior period information. Reading the most recent annual comparable prior period financial reporting framework that is related to entities financial information to assess the determine the nature and extent of procedure to be performed in evaluating the effect of character material statement and any identify uncorrected material statement in the prior period of financial statement. And considering significant financial significant cause material weakness in internal control. Considering the result of any audit procedure performed with respect of the current subsequent action taken by the management. Incurring of the management above the result of the management assess of risk under the interim financial information may be material statements. Change the entities business activities. The inquiry of the management about any significant changes in internal control and potential effect, such as changes in the preparation of internal and reliability of the underlying accounts records which interim financial information is agreed and considered. In order to who has not yet performed the audit of the annual financial statement upon receipt, obtaining and understanding the entity as an environment, including this is an audited determine the nature of the review procedure. It need to be performed in the comprehensive inquiries, analysis, and other review procedures. The auditor should take inquiries primarily to the person responsible for the financial and accounting audit. Perform the analytics and other review, enable the auditor to conclude whether the basis of the procedure is performed anything that comes to auditor attention that causes the auditor to believe that the interim financial the review accordingly does not require the test of accounting records, whether the inspection, whether the observation, whether the the order originally limited to making inquiries, originally limited to primarily a person responsible for financial rather than corroborating information obtained from the concerned significant accounting matter like information. In order to understanding of the entity relating to the proceeding audit. Auditor considering the materiality related to the internal financial information. In fact, the nature and extent of inquiries mean analysis of following procedure. Regarding the minutes of the meeting of shareholder whose charge of the governance and other appropriate committees to identify the matter that may cause the minutes are not available in any affect the financial information. Considering the effect, if any matters gives rise to modification in the audit, previous audit. Communicating with the appropriate other auditors who have performed the review of encoding of the members of the manager responsible for financial and accounting matters and other are appropriate to the following.